The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And our stock of the day is Treasury Wine Estates. So in keeping with some of the chat about tariffs, we could see a potential benefit from Donald Trump, the US president, of course, threatening a 200% levy on European wine. So Citi seems to think that this is a positive for Treasury Wine. It's rating the stock a buy with a target price of $13.85 a share. Treasury Wine engages in a double trade of exporting US wines to Australia and Aussie wines into the US, with mostly Aussie wines poured into the US markets rather than the other way around. Now, Citi warns that European wine producers may respond to the tariffs by increasing their focus on other markets, such as China, potentially offsetting TWE's expected gain. So it's a bit of a complicated picture, but Citi remains buy rated on Treasury Wine Estates. I'm going to ask my guest Raymond Chen from Morgans what he reckons.
Nadine, the way we look at Treasury Wine is they got three key divisions. So number one, as you already point out, Penfolds, that make up about 60% of the business. And a lot of people talk about tariff. So that's Treasury America. That make up a bit over 30% of the business. So 60-30, so what's left behind the 10% is the premium. So the premium business, they're selling wines below $100. That being a bit of problem trial out of the first half result. And that was the reason Treasury Wine revises guidance to the lower end. We think that the company at the moment likely, to benefit from the resurgence of Penfolds. They're allowed to, ship it back to China. My source from China telling me, Penfolds are selling well. It's just that they need more stocks. So remember, with any wine cycle, it is at least a 5-year cycle to restock. So we think the China growth will continue to be strong, even on a potential higher price. The thing we look at Treasury Wine, it has been on the nose for some time, trading on our projected FY26 PE of 14.5 times, and the yield is 4.7%. I think it's attractively priced at the moment. So I do agree with the Citi recommendation here, despite there's headwind, but I guess it's on a smaller part of the business.
Yeah, all right, so that's a buy to start this from Raymond Chen from Morgans. Let's find out what David Lane from Ords would do today when it comes to TWE.
Yeah, we start off with a double buy. We've got a buy recommendation on it as well. Our target price on Treasury is $12, so I think that there's quite a bit of upside to it, even though we've seen the share price rise today. And the tariffs that you mentioned should be a net positive if they go through for Treasury. They generate about 85% of their profits from the Americas, so it is a big part of their business, and potentially it will mean that the European wines, their price could increase by about 150% if those tariffs come through. So definitely a positive tailwind for Treasury Wines. There is some potential also that Constellation Brands, which is one of their big competitors in the US, could look at selling off some of their wine brands, and potentially Treasury might look at some of those, but it could be a bit of a disruption for the market that would be a positive tailwind for Treasury as well. So I think overall that the environment looks quite positive, and that at current prices, Treasury is very good buying.
Double buy for Treasury Wine Estates. That was the stock of the day.
The stock of the day was brought to you by IG. Trade over 12,000 shares and ETFs, including major tech giants with extended hours on an award-winning platform. Get started at IG.com.